Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi Julieta.
Garth, let's start off with Naspers, which was the most recent trade that you put on for the portfolio. Initially worked out well, in the last couple of days not so well. What's going on there, and are you still in it?
Yes, I am still in it, only just. You're right, it got off to a great start. If we have a look at the chart of it, which is on the screen at the moment, what I'd identified last week was a channel which was nicely upward sloping channel. We also had this big overhead resistance area at 1350, and I'm still of the view that it's going to go there and have another visit of that previous high. That level is becoming quite an important resistance level, but my sense is we'll keep knocking on it until eventually we probably break out through the top. But what I did last week was I went in and I bought 165 CFDs for us at 1,300 Rand, and I put a stop loss at 1,270. And you're right, it got out the blocks, awesome, a great trade. We were trading up at about 1,330 within a day or two. It was really looking good. And then in the last 2 or 3 days, it's turned lower. But the fact is we still, look, our stop loss hasn't been breached, so that's fine. We're still within the confines of that upward sloping channel. So, I'm happy to stay in this trade for the time being, and let's see what happens. I am still relatively confident that we'll have another visit at that 1350 high. But it is quite frustrating when you have a trade like this, which gets out the block so beautifully, and then, a couple of days later, it turns around and bites you.
Yeah. I mean, someone could say, well, why didn't you cut out at 1330?
Yeah.
It was close enough to the target area. But I suppose someone else might say, well, you want to kind of ride your winners. So, and at that stage, it looked like a winner, didn't it?
That's exactly, it did look like a winner. It looked like it was on its way to our target of 1350. And remember, my view here is that it'll visit 1350, but quite possibly could break through that. And that's sort of the reason for holding this trade. So it never really crossed my mind to bank that profit when it got up to 1330. I thought we were on our way to to the big bucks, and that didn't happen.
Green pastures.
Yeah, it's frustrating, but you know what? You've got to go into every trade accepting the risk up front.
Yeah.
I've accepted that risk. I know what we stand to potentially lose if that stop loss is breached. At this point in time, the stop loss is still safe. It's not being violated. So I think we stick with this trade for the time being, and let's have another view of it next week.
Okay. A trade that you have now cut out of after, I think, weeks of frustration is Exaro. So what pulled the trigger for you, Garth?
Yeah, we've had this position on now for probably the best part of 6 weeks, and it hasn't really done an awful lot for us. I mean, we've made a little bit of money on it. But what I'd identified here on Exaro was that this stock is, the technical structure here is actually quite weak. We've got this big descending triangle structure, and invariably these things do break to the downside. The fundamentals on Exaro are not great. I do still think it's probably going to break to the downside at some point. But the fact is that we've given it 6 weeks of time. We've been short since 140 Rand and 36 cents. And it's been lurking down at 137, 138 Rand, that sort of area for the last 2 weeks, and not really moving. We've had civilian aeroplanes shot out the sky and things to wobble these markets. It's not happening. So, on that basis, I just took the view that if it's not doing what I want it to do, I think it's best to rather exit this trade and move on. I also have a rule that I don't like to hold more than 4 open positions at one time when it comes to trading. And I like to keep at the maximum of 4 very focused positions. And I had another trade I was wanting to do this week, which we'll talk about in a moment, and I felt that something needed to move out of the way in order to make way for this new trade. So I figured, let's get rid of Exaro. It's not doing anything for us. It's time to execute a time stop loss on this one. So I have closed it out at 138 Rand. And we've made about, 3,068 Rand profits after costs are taken into consideration here.
So it's not awful. Garth, your 4 trade rule, is that because of financial exposure that the portfolio would be taking, or is it also time and efforts that you'd need to be watching more than a few shares at any given moment?
Yeah, it's a bit of both, really. In addition to the risk that we take on each trade and that we accept on each trade, you also need to take into consideration the overall portfolio risk of all the positions at any one time. And I like to, at the start of every day, look at all my positions and say, right, if every single stop loss was to get hit right now, where would I stand?
Yeah.
And what I found for me personally, and this is a personal rule, it's not a general rule, but I find that holding 4 positions is, for me, that's a comfortable enough place to be in terms of having my overall portfolio risk in check. And also, it also comes back to focus. I like to be able to keep relatively focused on the positions that I do have, and not have to spread myself too thin across multiple positions. Yeah. So that's really why I've chosen to never have more than 4 positions open at any one time. And keep in mind that's specifically for trading now. I'm not talking about investing. When it comes to investing, they talk about diversification, and you want to have as many positions spread around as possible. That's investing, that's great. When it comes to trading, which is what we're doing here, you want to rather be fairly focused and have that risk very much in check.
Yeah, risk management being one of the principal pillars of trading, day trading. Although you say that, and actually some of the old hands out there, the fund managers don't like to be exposed to more than 10 or 11 stocks actually. Yeah. So they just say, one gets maybe too easily distracted. So yeah. There you go. Okay, Garth, now you use the word nemesis to describe the next stock and the positions. I'm sort of wondering why Sasol has tempted you towards herself.
Yeah, Sasol is my nemesis. In my own personal trading, it's a stock I really, for some reason, I don't know why, but I really battle to get this one right. I've been stopped out of Sasol more times than I've got it right in my own trading. But you can't hold a grudge against these stocks forever. You have to eventually try again. And when I look at the setup on Sasol, it does look quite good to me. So I'm going to have another go here, and let's
hope
see.
the curse of Garth McKenzie does not prevail.
Yeah, who knows? Maybe we'll manage to shake the curse, as it were.
The hoodoo.
So this is our trade for this week. We're going long on Sasol. What I see here is a nice steady upward trend, which has been intact over the last, for the whole of this year, really. Sasol definitely is one of the strongest stocks in our resources sector at the moment. Nice, consistent pattern of higher highs and higher lows. It is trading near an all-time high at the moment, and it's been consolidating over the last 6 weeks or so. And I'm a big fan of buying strong stocks when they consolidate or when they pull back in anticipation of a next move in the direction of the prevailing trend. And that's exactly what we seem to be getting here. So we've got that uptrend that I've put in onto the chart there. There's also this big area of lateral support, which comes in at about 1,610 Rand. I don't know why I've got the thousands in my head.
Oh,
today.
Maybe that's your ultimate vision for the stock.
Maybe.
Long term.
610 Rand is where the support is here. We've also got this recent downtrend, which goes back to the middle of June, which has been capping the stock on all the bounces over the last couple of weeks. Now, what we've seen today is it's actually breaking out through that downtrend, and that to me is a buy signal. So what I'd now do is buy, and I've done it. I've gone and bought at 627 Rand. I then put a stop loss underneath the recent lows of all these candles over the last 2 weeks or so, and that's at 613 Rand. I'm looking for a move now back to 650 Rand, which is the previous high that we saw in the middle of June.
Did it actually hit 650?
It actually went just beyond 650 intraday. So I'm looking for a move back up to that sort of area at least. So if I put my risk to reward ratio blocks onto this chart, the red block there indicates the risk. In other words, that's the difference between our entry point and where our stop loss would get hit. And then the green is where the difference between where we go into the trade and where our take profit target is. So the risk to reward ratio here is about 1.6 to 1 based on that. It's not huge risk to reward ratio, but it's still nonetheless decent. And I think the setup here to me is quite an appealing one from a technical perspective.
Garth, was there anything in particular that happened that it spiked up like that? Because there was a big and fast rally to that 650 level.
Yeah, you're talking about that move over there, which was rather violent. I'm not aware of any particular event that might have caused that off the top of my head. But I mean, just looking at it purely, it does look rather, we call that quite squeezy. In other words, it could have been quite a short squeeze there potentially, and that often does tend to result in an aggressive move to the upside like that. And then once the shorts have been flushed out, as it were, then the stock tends to drift back down and settle, and that's what we've seen happening now over the last 6 weeks.
Okay, well, take us through the trade in greater detail, if you will.
All right, so I've gone long at 627 Rand. My stop loss is 613 Rand. My risk per share, therefore, is 14 Rand. That's the difference between our entry price and our stop loss. I'm risking 1.5% of our trading portfolio here. And we've got 337,000 Rand in our capital at this stage, so 1.5% of that is 5,055 Rand. We take our portfolio risk and we divide it by the risk per share, and that gives me 361 shares that I can trade. So rounding it down to 360 CFDs. My target, as I said, 650 Rand, and my risk to reward ratio there is 1 to 1.64.
Garth, risking 1.5% of the account, is that because there are a couple of other trades open, or is it because of the the fear of Sasol has sort of got to you in a small way?
Yeah, maybe it's the fear of Sasol. I mean, technically speaking, that's a great looking setup. I probably should be going for our maximum risk on this trade.
I mean, if you had to
2%.
take Sasol, the name, away, and it was an anonymous stock, you would enter into the trade, wouldn't you?
Of course, that trade I would take every time, 10 out of 10 times. And maybe we should have risked our maximum, our 2% on this trade. But we do have other positions open in the portfolio at the moment. So I guess it's also just a bit of responsible risk management in the sense that, we've done well for the year to date. And I'm quite happy to try and just carry on easing nudging the portfolio forward without getting too aggressive.
Yeah. Garth, we've got a couple more minutes to chat before we get to what the state of the portfolio looks like, although there is a hint there, 337,000 Rand. You mentioned civilian planes being shot out of the sky, and I think most of us would have expected much more nervousness on the market than what we've seen. Are you finding it quite hard to read the markets, or is it, as it is, a political event that shouldn't ultimately have too many economic ramifications?
Yeah. Look, what I've found with these type of events, and once you sort of separate the human tragedy out of it,
sure,
and come back to what drives markets, what I've found over the years is we've had a number of these type of shock events that have come along. The big one obviously was 9/11 with the Twin Towers. That caused massive waves throughout markets worldwide. Years later there was the London bombings and so on, and we've had a couple of other sort of terrorist type attacks and these sort of things happening over the years. And what I've noticed is that the market's response to these sort of things has become more and more muted, as it were. Yes, there's maybe a slight knee-jerk reaction, but it seems like any pullback is very shallow and is quickly forgotten, and markets very quickly get back to the business of what drives markets: earnings and liquidity and momentum in the stocks and so on. And I think this was a classic example of that. There was a day where the market was a bit weak, and then we just quickly forgot about it. Certainly in the market context, it was forgotten about and shoved aside, and it was back to business.
Yeah, and maybe the other issue is that in 2001 we didn't have the amount of liquidity that we have supporting the market, and I have seen some interesting charts recently showing that, and we talked about them last night, just the amount of money there and multiple expansion basically pushing up the price of the price earnings ratio as far as shares go, rather than the earnings driving the shares higher.
Yeah, so that's right. Yeah, I think that's it. Markets they seem to revert back to what drives markets at the end of the day and what really matters for markets. And as much as this event was a terrible tragedy, it doesn't really have any bearing on earnings at companies and things specifically. So therefore, I suppose it's understandable from that perspective that the markets largely just brushed it off and carried on.
Yeah. Okay, well, let's go through what the portfolio looks like and just remind ourselves what open trades you have at the moment.
Yeah, right. We've got our, there's 4 open positions. I mean, Exara, we mentioned, we closed that this week for a profit of 3,068 Rand. Now, the trades that we've got on, we're still long of PSG, and that's looking good for us. We're up 16,500 Rand there. Naspers, we are still in that trade. It's more or less at break even. I've got it here with a 181 Rand loss. We're more or less at the same level as we started there. Sasol we've gone into this week, and then obviously we've got this put spread option structure working in the background for us, and that runs out to September, and we'll see. I mean, really what that is, it's downside protection for us. So if the market was to pull back, then we'd obviously be sitting pretty having that option structure in place. If it doesn't, if it continues to rally, well, it's cost us 3,400 Rand in premium, and we'll kiss that goodbye. So as things stand, our portfolio has got 337,000 Rand in it. That's up 35% for the year to date. So looking good, and we've still got about 5 months left in the year of trading.
Well, looking good. Long may it continue. Guys, we'll leave it there, and we'll chat to you next week. Thanks as always for joining us on the show. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.